Okay, good morning, traders, and welcome to this live intraday strategy webinar. Today is Tuesday, March 12th. We just got the release of core inflation in the US coming in at 1.4%, guys, slightly softer than the 1.7% print that was expected. Year on year, that puts us at 0.3 minus the 0.4 that was expected. So a slight underprint on inflation. I don't think there's any surprise there, but wanted to get that out to you. Good morning to everyone in the room. Iman, Aurelian, Gary, Pete's in the house, Peter's in the house, Sarab, Steve, Ziad, great to see everyone here. So on the menu, we're going to hit sterling from yesterday, dollar yen, Kiwi gold, euro, dollar CAD, Aussie, SPX still ranging right into that resistance zone. You have a little wedge formation that's forming right now. Aussie Kiwi right back up at resistance. And I guess we'll start off with the DXY, but there's not really much to cover. Here's what the DXY looked like essentially into the close of last week. Right, we had made that breakout. We were looking for resistance right here at the 786. It was right at 100, spot 39. That ended up being the high. We moved lower, found support, ripped higher, came off resistance again, and here we are with the monthly opening range taking shape. Okay, right at essentially right at the monthly open. Here's your monthly open. You set a low on that first couple of days, you strike higher, you test monthly open support, you test higher again, it fails. We're looking at a near-term range in formation. Same thing with momentum. And the weekly chart's got nothing on this. I don't even want to spend time on it, but just a quick reflection again. Sarub, oil. Yeah, I'll throw oil on the market there. I don't, near-term price action, maybe. Longer term, the charts are all jacked up, but we'll take a look for sure. So here's the weekly, same slope, same reaction, right? Failure, flatlining momentum. Daily chart shows the opening range for the month taking shape. Here's the intraday chart. This is literally the same exact levels from last week. Broke lower, there's that 2019 high, now near-term support and the weekly opening range low. So you're still looking at 99.67. And then the 618 of that same range is preserved, maybe a little hair higher. Okay, gives you 99.30 instead of 99.30 or 99.33 instead of 99.32, but you get the picture. So unfortunately, the range-bound conditions abide, and until we clear this 99.13, 100 spot 39, this range right here, you have to allot this thing for more sideways action. Now, there is opportunity, as I always say, within these declines, within these ascents, if you get really granular with price action, depending on how tight you're getting. But look for a break, at least of the weekly opening range right now for guidance. Remember, our broader picture was to look for topside exhaustion. On the back of this rip, you would have thought you would have had a little bit more legs to at least make a higher high. It did register a new high, but here's the reversal. Watch out on this. Not much conviction on this one. So that's number one, your DXY. Just wanted to get that out of the way. Let's jump into yesterday's update. Here's British pound, and here's what we looked like last night. So this near-term downslope may be in play, but at the end of the day, this is the daily chart, right? We're looking at a near-term consolidation just below downtrend slope resistance. So again, you know, our default sort of ideal scenario was to look for a new low, okay, and then to look for resumption. We're still looking with the broader rally that this was a major key low that we set back in March. So until we clear this consolidation, we are where we are, okay? That slope, if you recall, we were connecting it to that late low in April. We've adjusted it, and now we're looking at this. Gradient's holding for a third day here. And until we clear it, guys, again, range. This is great news for near-term traders who are really just watching these near-term ranges, but for trend traders, larger swing traders, we gotta wait for clarity. Could you also look at the abomination, exotic cousin, dollar peso? Love the terminology, Gary. Dollar peso, I got you. Yeah. I can't stress how much they love that on JFX. We'll definitely go over it for sure. So that's sterling in a nutshell. Here's the intraday. Okay, same slope, same levels, nothing's changed. Here's what it'll look like again. Saw that tag yesterday, saw it again in overnight trade. Here's that Friday swing low. 123.97 is basically the 124 handles. It's still 618 of this range, which is intact. Near-term bearish inval, or at least what would alleviate the downside bias immediately, would be an objective opening range break, which would take you through slope resistance. Looking for 125 in that case. That's all I got to say about this. Use caution on euro and sterling, guys. Both of them are kind of, they've been just, you have to be patient until we get the move. If you're near term, again, real intraday, sure, but don't get any, I think we got to be a little bit more prudent here on both of these. All right, on the downside, by the way, if we break slope support, you're still looking for 22.45. That's the objective late swing low that we made there in April. And then you'd be basically looking for 21.74, the lows from the April calendar month, and a 38.2 the entire advance. So the levels are well mapped out on both sides. It's just that we got zero momentum on either of these. Number 2, sterling. Here is the abomination. Number 3. Breakout in dollar yen did see a nice stretch higher. That stretch is pulling back, but we're looking for a support on this pullback. Okay, here's what dollar yen looked like last night. So again, into the start of the week, or this was on the previous update, we were looking for right into the start of the week, slope resistance 109, 106.92, bearish inbound 107.13. That's the objective monthly open. Interim support 106.42. Break below 106 is what's needed for resumption. We ripped higher into the open, blasted through. We made short order of 107.13, and we even took out the April open. Okay, so here's the pullback. Don't stress the April open at this point. This is what it looked like last night. I kind of want to drop this point as a reference point at this point, but just look at this. Momentum, sure, overbought. Could have seen a little bit of a pullback. It was an overbought condition yesterday, and I told you guys, even if we get the pullback, look for 107.13. Bullish inval now raised to 106.92. So I would choke that up even more at this point, but same two sort of zones of interest. If we see the slide lower, that's what you want to see hold if the breakout has legs. That formation was multi-week. So if this is legit, losses should be governed by 106.92. Upside targets unchanged at 108.09 is the 618 retracement of the entire decline, just from the April high. And then key resistance right at the objective yearly open and the 786, that's 108.62, 108.65. So we'll see. I'm recognizing that I'm working with the abomination here, so I'm not going to get too aggressive on it. But from a technical standpoint, the break is the break. Here's what this looks like on the daily chart. Give you a little bit more of a reference, right? It's the high from last month. Remember what I always tell you, 2-point touch trend lines speculative. The third point is what confirms. So one, I mean, any one of these three you can say was 2 or 3 points. Here's the third, here's the fourth, fifth. That's a break. So that break is legit. Losses should be governed by 106.92. Questions on dollar yen. Here's dollar yen on the weekly chart. All right, could see a little bit more upside, yeah. No worries about it, but still basically looking at that same zone that we've been in for the last 3 weeks. All right. That is dollar yen, number 3. Number 4 is Kiwi. And Kiwi is at resistance like right now. Yes, Eman, of course I'll cover euro. I don't know why I went in order of the reports today. It's actually right after gold. So I got you with euro for sure. Here is Kiwi. The weekly chart isn't too compelling. I don't want to stress this. The only thing I do want to highlight here is more broadly major resistance is still up at 62, essentially 61.97 is a 2015 low, right? Um, we were looking for a near-term exhaustion trade. Here's what it looked like on the daily chart. Okay, we had made an outside day reversal yesterday off of a fresh May high, and that took us way back below the objective monthly open. Now the high day close is the same as the monthly open, essentially at 61.26. So the high day close from April and this month's open, no surprise, right at the same level. We did a quick peak above, outside day reversal lower. Do you think the exhaustion trade's still there? We're still within the broader upslope. We're still, again, same type of assumption that we're making with these lows in March, but um, we still have the risk for a deeper pullback from here. Here's what it looks like on the intraday chart. Here's what it looked like last night. Okay, so we had made that reversal lower. We noted this slope. We don't have enough efficacy or enough, validation, or as of last night, we didn't to really stress this, but the high day close came in right with the upper parallel, and we labeled that as sort of our near-term resistance range. Bearish inval, the thing that would shift your focus straight higher, would be an objective break of the monthly open. Stop traffic, there's slope there too. So we dropped down lower last night. We did almost see a tag of the median line. We turned like literally pips ahead of it into the open of Asia. Here's the reversal and the rip higher, resistance 61.26. We registered a high just now at 61.24. Okay, so if this is gonna hold, we need resistance right here, right here. In fact, I was just taking a look at this right ahead of the webinar, so it looks like it's working pretty well. But we need to hold this region of resistance. 61.45 would shift the focus right back to resumption, right? And then you're looking for 62, 62.14, 618 in that 2015 low. It's right up here. But for now, if this slope has any merits, like this is basically what you want to see. You want to see that governed. All the while recognizing a few things. This is just the simply Monday, Tuesday range. You're right. If this slope has any merits, again, this is only 2 point. Again, that would still govern by the weekly open. As long as that holds, you're still in contraction. Higher lows, lower highs. Any question on Kiwi? Now, keep in mind you do have the interest rate decision later tonight in New York. RBNZ is obviously expected to hold, nothing new there. And that's sort of the sense I'm getting from a lot of guys here in the city with regards to these central bank rate decisions. Like the focus really isn't on monetary policy at this point. It's really on the health and the rebound that they're going to see, if that, what kind of rebound in consumer spending. It's really the big thing at play here. So we'll see. We'll see. Watch for the RBNZ. It's later tonight. Questions on Kiwi? Going once, going twice. Okay, we'll do a quick hit on gold, and then we'll jump right back into the majors just to go in order from last night's update. Here's gold, and the range contraction continues. Okay, now into the start of the week, again, the high day close, 1726 into 1733. That's still your critical resistance zone. Again, recalling the weekly charts, we've been looking at that zone for months. Here's the daily chart, contraction, contraction, contraction. The monthly open comes in with basic slope support. Then you have that confluence region on the upside. So anything in here is noise. We're looking for the break. Here's what the scalp looked like last night. Here's what we look like now. Contraction continues, excuse me. And the near-term chart, it looks all right, but starting to lose confidence in this slope. So I'm still kind of just focused on the objective stuff. basic range contraction. Remember a modified pitchfork. This is basically just a basic slope off the high here. You have this slope off the low. Look for this wedge break. Risk, again, my humble opinion is still that you get the bigger correction before you start to see the rebound. At the end of the day, anything northbound of 1733 is gravy. So range, range, range. You know, back in the day, young Boutros would have been scalping the heck out of these markets with all these ranges that are just defined. These days, I find with COVID and home and the family and the kids, it's not quite as simple, but the opportunities are there, guys. If you're not in tune with near-term price action right now, wait for these range breaks. They'll be clean. All right, that's gold. Bring Young B back. We are trying to scale. I'm here, Andrew. I'm here. He's in there. Gold. So that was gold. So we hit euro real quick. Here's euro, E-man. I'm not. It's kind of like sterling for me. You know, I wanted to see a larger pullback to get long. If this was the magnitude and I missed it, I'm going to be pretty teed off. But it looks like we're getting a. You know, it's too early to call this a affirmative weekly opening range break. But look, if we're going to break higher, 108.97 and 109.93 are still the same levels, right? This is the breakout level that would shift the broader focus higher, put us back on the sort of resumptive trade for euro. But hey, look, at this point, you're already poised to make an outside day reversal. I was looking at this too. So I'm inclined to look higher. I'm inclined to look. I don't have anything on this, just a disclaimer, but I'm inclined to look higher on this move. Now we haven't even opened U.S. markets yet, and I recognize that people were talking about this inflation number like it was going to be something. Again, no one's expecting inflation to really be a concern for market participants at this point. Look for 108.97. Look for 109.93. If 109.20, excuse me, 109.23. If 109.23 gives out, I'd be more inclined to sort of be looking for a resumptive move in euro. But there's just been too many fake outs. Bear with me one sec. Interesting. Yeah, I mean, just reaffirms targets we're looking at. And here's euro again, taking it back to is taking a step back whenever we get stumped or whenever price action ranges and you kind of want to take a look back. Here's the euro weekly chart. And remember, we talked about 107.77 for like weeks, literally weeks. You can see how many times we bounced off it since the break. 1, 2, 3, 4. This is the fifth week, just over the last month and a half, that same level has continued to offer sort of a really strong support zone from a weekly standpoint. So yeah, I mean, the immediate threat, I'd probably say still higher. If we're breaking the weekly opening range high, we made it through the weekly open, we pivoted back above that 108.21, 108.33 level. Look for what 109 essentially, 109, 108.93, 108.97, this zone right here. And I don't want to get too granular on this, although Andrew might like it, but let's take a quick look if there's any slope to the let's give us some sort of a time reference. And that would suggest on any pullbacks, you're basically looking for a defensive Friday's low, bottom slope. Keep 107.77 in view. So see if that slope holds. For those of you who are trying to get or holding positions on this, see if that slope holds. Ideally, like ideal scenario, 108.40s kind of governs any pullbacks, but bearish inval in the advance would have to be right back at that 108.21 level. It's too early to rely heavily on this, but Euro's been very channely, if that's a word, lately, as you can see. All right. Euro recently is making a lot of fake out moves. Everything is, man, not just Euro, not just Euro. I'll take it right back to the pound, or even the sterling. As we were coming into support, remember we were watching a little bit tighter of a slope. Looked like it had cracked the downside before it whipped back higher. There's a lot of fake outs in general. I don't need to remind you of the SPX fake out, right? Last week, popped right through resistance, slammed lower, right? We even got to close above, and here we are again wobbling through. We'll look at the SPX. The levels are ridiculous. But anyway, that was Euro dollar CAD. Here's number 7. So also one that is pretty decent in actuality. That slope that we added last week seems to be holding pretty well. We got a raised ceiling here, so it turned right ahead of resistance. And here's what it looked like earlier in the week. So Euro levels are unchanged. Dollar yen we covered. Here's dollar CAD, right? Into the start of the week, 618 was at 40.11. Looking for resistance ahead. Basically, while within this formation, bearish inval key resistance, still the same place where we turned last week. So we came into that 618. It actually did kick back for a couple hours, but here's the break higher. Again, it failed at this slope. This is a longer slope. Again, I don't want to confuse anyone and keep zooming this out, but this is the longer term slope that we were looking at on the daily chart. This thing, right? So we pivoted, and you could see actually pretty decent pivot action along that longer term pitchfork that we've been following. Let me take you back real quick. Sorry for the back and forth. Bear with me. Here we go. So here's Kiwi, dollar CAD on the long term. There's that median line, right? This year, it's been actually pretty decent. Again, bringing it to a close, cleaning up the lines a little bit. See probe, break, instant resistance, break, acceleration, probe, break, but you're seeing really nice pivot along that gradient. Long story short, looks like we just tapped resistance on the daily chart. We were looking for resistance ahead of that slope. Here's the turn. Don't have any validation that we've turned yet. Weekly opens all the way down here, but the low day close and the May open is what I'm focused on. That's 39.45. That's what I want to see break. So choke up these reference points. And look for a reaction there. Here's the 120. And here's again what we looked like earlier in the week. Support bounce, turn right ahead of resistance. Need to see a break at least of the weekly open to get this thing kind of validated for the reversal lower. Here's the daily chart. Questions on Looney? Now, I guess we can take a quick segue. Sarub for oil? We could take a quick segue into oil. I'm not really sure how you want to approach this. It's the same sort of zone that we talked about. I think the last time you requested it was either Thursday of last week or I don't know if days are all blending in together. It might have been yesterday. But here's the daily chart, right? Obviously, it doesn't reflect the low. This is the pitchfork that we were working with for some time before we even saw that low occur. Here's the median line. You got the 2016 low day close. You got the 2016 low, barrier of resistance. I mean, I'm bullish, right? Longer term. I think that thing was ridiculous on the prices that we saw. Um, it's just how do you play it from here with a proper risk management or any type of conviction. My fundamental theory, my fundamental bias, Sarub, is not a trading strategy. That's all it is a bias. Remember, every setup needs to be taken by on its own merits, risk reward well defined, levels well defined, what you're trading in well defined. You're trading at such a critical level right now. I don't want to touch this because you're trading at downtrend resistance, former major multi-year swing lows, and it's make or break. If it pops, it's going to rip higher. So I don't want to short it, even if I think it might pull back. And do I want to take a long right here? No. Where's your stop? There's no responsible stop at all. So I don't really have a dog in this fight. You know what I mean? Here's the intraday chart. Um, you could take a lot of different interpretations of this. I found myself kind of like wishful thinking, kind of just trying to force slope on it. That's the best I could come up with, kind of dismissing all of the negative price action. Obviously on WTI, that's not even reflected here. If you bring up the front month order, CL1 exclamation point here on TradingView, you'll get a better sense of that negative print, but I don't really want to filter that into price action. And I always tell you guys, when you get the extremes in price, whether it's because of low liquidity conditions and there's just not that much volume, or whether it's because of some unforeseen shock event, um, those major swing highs, major swing lows, really thin, fast moves kind of jack up the technicals a little bit. So I usually wait for price action, dust to settle, and then I start basing new structures just off of recent price action. I don't want to take into account all the emotional that was happening over here. So just using the subsequent April, late April low, high, low, that's the best I could come up with. So what does that mean? Well, technically, okay, again, if we're in a regular sort of market condition, you kind of just want to level things off. 24.38, that's basically last week's swing low. That's going to converge on slope. That's below this week's opening range low. While above that, you're looking for resumption. Could be a near term, wedge consolidation, kind of like we're seeing across the board, right? But it's just the trade's not there for me, Saru. So if the top side pops, I'm with you. There's probably enough run at least to go for yearly trendline resistance. It's only a 2-point touch, but if we tack on sort of, I mean, that's the problem. It's trying to ascertain a low for a retracement. It's going to be different on every platform. Yeah, you'd be looking for like 33.50s, somewhere around this low. Take an objective low would be sort of that breakdown low day close. Let's call it like 30.18. So possible like off the cuff levels, Sarub to look for, but you're trading in a highly emotional, highly event or headline driven market right now. And I think the broader trade is broadly bullish, in my humble opinion. You're not going to see that's like a might be a multi-generational low unless the oil industry is going to completely go bust. But that's my take on it. So we'll check that off as a 7.5, number 8. How about that? Number 9, here is Aussie. And again, range is the name of the game for most of these setups. Here's Aussie into the start of the week. We said, guess what? There's resistance. 1618 extension off the low has held, tested on Friday twice. The upper parallel is there as well, 65.46. Look for a reaction right into the start of the week there. If it pops higher, you're looking for 65.85, okay? March hard day close, you're looking for that resumptive move. If it fails, look for the pullback. 64.94 is the first level, just the 618 of the range we're still holding. And then this is still key support at 64.48 into 64.20s, this whole zone. So what happened? We went for probe early in the week yesterday, quickly failed and went right through into support. That held. We're right back at resistance again. Look at this thing. You can't make this stuff up, guys. So, per your comment earlier, Eman, fake outs galore. Here's a fake out right here. Pop through, failure, right into support, took out that support target, sat there for not too long again, and here we are covering the entire weekly range already. So to put things in perspective, you set a 2% range in one day and covered it twice already into the second day. Phenomenal. Phenomenal. Now remember, we're broadly constructive, Aussie, but we've been bearish since the start of the week because we were at near-term downtrend resistance. So if you played this yesterday and you got that move in, bravo, well played. I hope you're break even, if not out on this rip here. But guess what? It leaves us right back where we started. We're unchanged essentially on the week, a hair lower, 15 pips lower. Looking for weekly open resistance, which is still 65.31. We're still trading below that. The upper parallel, still watching that. And at least, on its face value, you have an objective weekly opening range at this point. You've tested, obviously, key resistance, a swipe right into a major pivot zone we've been watching for weeks and weeks and weeks. And it puts the emphasis really on a break of this near-term zone. Same range applies. All things held constant, guys, it's phenomenal that we're seeing price action play these levels, right? Um, I get excited. I really like to see, even if I'm not in the position, that price is respecting the structures that we've got in place and respecting the broader trends that we've been looking at. So if you have FOMO, if you've missed some of these moves, or you've been unable or trigger shy, the market will provide, guys, on some of these ranges. Don't play anything outside the range until we clear it. And stay nimble, as I always say. I played Aussie Kiwi perfect trade, shorted it at 106.80 and went out 106.20. Man, well played. That Aussie Kiwi is actually, yeah, we'll take a, you know what? Let's take a quick look at that right now, and then we'll jump to SPX. Here's Aussie Key. Another one. Eman is 100% right. It was kind of a textbook play, but you didn't want to sit in it for too long because it came right back, just like Aussie did. That being said, it's still within the confines of the formations that we're following. Eman says now we're back to where we start. Exactly. This is why my concept of being nimble in these range-bound markets is really critical, guys. When you get the move and it hits the target, do something, right? Now, typically we'd be in trending markets, we'd say take a little off, bring your stops to break even, and leave a little on the table. That's not the market you're in right now. Last couple of trades for me, all in, all out. I just don't want to sit there and kind of, if we get the break, there's no breaks. There hasn't been breaks for like weeks, and all the breaks have been false breaks. So play the ranges until we're out. But here's Aussie Kiwi. Again, I take you back to the broader picture of why we started to look at Aussie Kiwi to begin with. It's been months since we've covered this, at least on the intraday charts. Basic slope resistance. Remember, 2-point touch, speculative, third point confirms. A couple of weeks ago, we tagged that and pulled back with a negative reversal candle. Ever since then, I've been kind of keeping an eye on this, right? Momentum, struggling. It did find some range above 60, but you're right there. Here's intraday, or here's the daily. Same slope, 618 from just the 2018 decline. The new high day close, newly minted high day close from back last month, gives you 107.15, 107.22, and you're still at risk for a larger pullback while below that. You guys know me, I'm not really huge on Elliott, but when the wave count is evident, it's something that I find very helpful as well. A quick look at this, just on a quick glance, 5 waves looks higher, right? 1, 2, 3, 4, 1, 2, 3, 4, 5. Third wave being longest. So consolidation, one more pullback, corrective move before resumption. Still think the risk is lower below 107.15. That said, the broader trend is up, right? So we're playing the pullback. So when you're doing that, you want to be more nimble, you want to be much more reserved, and you want to lower your position size, generally speaking. But here's the slope that we presented earlier in the week. Okay, so daily chart, there it is. That up slope is what you're seeing there in pink. This was before the market opened. We kind of wanted to see this break to get the validation. Here's what it looked like into the start of the week, right? Gap lower into the open, moved right into slope resistance, and that's so far still held. At this point, this one has set up a very clean weekly opening range, right? Right below key resistance. Here's your weekly opening range lows. Here's your weekly opening range highs. I think it's going to be a beautiful play either way it goes. I'm flat on this again as a disclaimer. Here's your weekly open. Oop, what is that? Okay. Weekly open is basically at the weekly opening range lows. Watch that slope. If this pops through, you might get a decent play in 107.20, 107.15, but don't forget that's still the key zone you need to clear to mark a resumptive trade higher in Aussie Kiwi. Questions? Well played, Eman. Well played. And good foresight to get out at 106.20. I love it. You right at the weekly open. What a great objective level. Thanks for you, Eman. Cheers. They're not my levels. I always tell you guys they're the market's levels. I'm just helping you find them. All right. That's Aussie Kiwi. Let us hit peso real quick, and then we'll jump into SPX. Here is peso. This was for you, Gary, right? Here is dollar peso. So again, a chart where the whole premise of why I started, I mean, before this year, guys, I probably haven't written about peso. I don't know if I ever wrote about peso. But the breakout was legit. It was meaningful. It's at record highs, but that high also registered at a technical level, which was insane to me. Just the reaction that you got. Remember, right here on the week of April 6th, you had registered a fresh new record high. Everyone was thinking this thing was going to the moon and beyond. There's a 200% extension there from the advance off the lows you made in 2017. There was upslope resistance for a slope we were following from the 2017 highs and this year's low, basically governed the whole yearly range. And that week saw a massive reversal. The high week close is all the way down here, right? So ever since then, it's been in decent consolidation. On the daily chart, you had this start to you had this starting to happen, right? A little bit of a consolidation, higher lows, lower highs. It looked like it was reversing right here until the close of last week. You broke below that upslope. You found support, right? I'll show you the near-term chart in a moment. And you basically bounced. My whole focus was what was going to happen on this stretch, right? The monthly open comes in at 24.1665. It's basically exactly where we registered a high so far today. I'm really paying attention to this. If this is a simple break of support, retest of supporters resistance, 101 technical analysis, right? We should see a resumptive move from there. We pop through the monthly open, former slope resistance or former slope support turn resistance, essentially says that that slope break was null and dud, right? Here's what the intraday chart looks like. So there was the break. Looking for May open, that cracked 106.23. I'm sorry. Where is the peso setup? Have I not updated you guys on this here on? I thought I put in a setup on this. Anyway, I don't have it here. But anyway, here's the intraday chart. It's the same chart that we've been working with. There's that slope. I went over this yesterday on the webinar in Daily Effects if you guys were with me. We came right into it and pulled back. I can't make any assumptions on that. In my mind, this is a simple weekly opening range just below slope resistance. I want to see this break. If it pops through, the high day closes 61.47. That's way outside the realm of what I'd want to be trading against. Let's just say that. So we'll need a weekly open break, specifically weekly opening range break would be great because the weekly range lows is right at Friday's low. So I think it's worth waiting on this one for the break for clarity, but if anything, I'd be looking for exhaustion ahead of 24.6147. Whether that's here and that was the exhausted trade, or whether you get one more pump higher in this market condition, Gary, you know what I'm saying? It's not something I'm willing to necessarily get too aggressive on. Does that help? Okay, it does. Cheers. Can't help but feel like it follows dollar yen though. Interesting. I don't know how you could say that, Gary. Dollar yen just, I mean, listen, it's a dollar-based currency with the dollar at the forefront. So yeah, if dollar is ripping in general, sure, Gary, they'll move together. But I don't know how you could say this move is any what somewhat comparison to what we just saw in dollar yen. I mean, there's just no comparison. So be careful trying to make links like that. You know, you might get yourself into a little bit of a jam. Take every trade on its own merit. A trade for you to watch, my friend, is EuroCAD. I went long at 51.50. One for you to watch in your office for a scalp. EuroCAD, let's take a quick look. What is this, number 11? On the daily yesterday, got me real good. Oh, Gary, you're talking about dollar yen? Um, EuroCAD, as you can see, Kelly, I haven't really updated this chart in some time. You're getting me interested here. Let's take a look. Let's see what the weekly charts. We got that major breakout for sure in February. Hmm. All right. And that's still the register low. Interesting. I'm gonna take a look at this because from a fundamental standpoint, even I hate my fundamental standpoint, meaning the individual biases per currencies on an individual basis. The concept does seem right. Um, for a move higher in Euro CAD. You look at momentum signature, the things that we always like to look for on the daily charts. If in strong uptrends, pullbacks should find support at or above 40. In strong downtrends, in strong downtrends, RSI should find resistance at or around 60. So you can see the behavioral change here that we saw throughout the entire decline of 2019 into the lows, which registered an oversold condition. Which again, multiple oversold conditions into downtrends is healthy. It continues to suggest downtrend is intact, but this is the first overbought you got since the high. And on this pullback, here's 40 support and momentum. So from a momentum study, just looking at this from the profile, it does look you'd want to be on the constructive pull, or you want to be on constructive trade on pullbacks. I just wish there was some structure to the advance. Point in fact, if that is a high low high, or a low high low. Let me just see what this looks like. Yep, yep. It's the same range, so you're not surprised to see the 100 there. Levels of interest, Gary, or this was for Kelly. Levels of interest here on EuroCAD. If it's gonna hold, and if it's gonna continue, your next upside target. That low seems solid. All right. Hope that helps. Add some flavor to a trade you might be looking at. Hey, you're more than welcome. Good to see you back in the room. And we did not hit SPX, did we? Here is number 12, Spoos. So the S&P 500 is flirting with a major level, okay? It's messy. It's starting to get unruly. This pitchfork has lost efficacy in my eyes, but the lateral levels are still what we're focused on. Here's the daily chart. 100% extension off the low, 618 retracement off the high, gave us 28.95, 29.32, 33. We did one daily close above, quickly reversed, made a 236 retracement, the entire advance off the lows of the year. Here we are again yesterday, probed above, closed below, and here we are again. What the heck is this? Well, a couple of things to note. Last 2 days have found support at monthly open, which is right down here at 28.90. It looks like a near-term consolidation right below 60 as momentum ranges as well. So you have no clarity on that front. After an oversold condition, a hold at 60 would suggest you're still the momentum still in the side of the bears. So it would mean something to see that behavioral change or the pop above 60 here. Haven't gotten it yet. Here's the intraday chart. So it's just a consolidation and not even a clean one at that. Like, what is that? Are you counting that as a breakout? Because I don't trust this level, right? I don't trust this level. We did this before and then just sunk for a massive decline. Here's the consolidation. If it breaks higher, fake out. I mean, think of what would screw as many people as possible. It's probably what we're going to see happen here next in SPX. If this rips higher, maybe fails right at the April highs and then reverses, that'll be a major jackknife play. And if you get below 28.90, remember the May open, you look lower, in my humble opinion. If you break this near-term consolidation, the highs, okay, 29.72, but that's still a level you'd want to be weary at. You know what I'm saying? And it's just because, guys, there's really nothing here. A lot of what we've seen in the rally, is more sentiment based. There's nothing in the metrics to really help right now. And yeah, if it's market's forward looking and the market has a rosy outlook that the opening process that's happening in the United States and across the globe is gonna be well received, and things will get back online, sure. From a trading standpoint, man, this is the most lackluster sort of near-term consolidation as possible. You're not really holding that range resistance. The only thing I do like is the support that we've tested for literally 3 days now. So May open support, a breach above 29.72 is what you need to mark resumption. In that case, you're looking for 30.28. Let's see if the hopium continues. So for the sake of clarity, guys, I'm just gonna scratch this slope. Okay, work with this right now. Just work with this. Any questions on SPX? All right. Well, if there are no other questions, I'll go ahead and wrap things up here. Keep in mind, again, for the setups that we've been watching, specifically for me, it's going to be obviously Kiwi, watching to see if we hold resistance at the high day close, but Aussie Kiwi as well as you head into the RBNZ later tonight. See if that offers any kickback. Pete, did I not cover Euro? Where is my mind? I thought I covered Euro. No, guys? You did, right, Amen? I'm losing my mind. Yeah, Pete, I think I did. So here's the just setup one more time. Sorry about the brain fart. Yeah, no, we covered this. We covered this. Watch 108.97. It's just ripping right now, right? 108.93. That level, that's two critical levels. If we do see this breach, You're looking for the resumptive move. But we talked about this earlier in the session. Looked like a basic breach of the weekly opening range. So yeah, objectively, you have to stay constructive above 108.21. She says, yeah, it's my fault. No worries, Pete. Just wanted to make sure it's an important one. All right, guys, best of luck trading. I will see you on Thursday morning, same time. Cheers.